Hello all, so today we are going to do a session on MTP for GST for Jan 2026 exam. I will be covering the GST portion of the mock test paper. Both the mock test papers will be covered. The first session will be MTP 1. I'll try to finish it off in around half an hour so that you just have to spend 1 hour in total to cover the entire MTP for GST. Alright, so without any delay, let's get into it. First, is obviously the MCQ. Okay, as I have said before, I have said this multiple times. Case scenarios, when you're dealing with your multiple choice questions, read the questions first, then go back to the question, then go back to the case study. All right, so it will help you understand what they are expecting. So first question, they've asked tax liability for the month of April. Okay, import of service, will it be treated as supply? Okay, and will be eligible to claim ITC held on stock and capital goods as on. Okay. Now we'll come through the case study. Sharika and Co. of Jabalpur was registered under GST under composition scheme. Outward supply of the firm for April 2025 was 10 lakh. They asked the tax liability for April. Okay. Out of which 2 lakh was supply of services. In the preceding financial year, the firm was doing trading of taxable goods only. Turnover of the concern for the previous financial year was 100 lakh. Okay. So the first question was, what is the tax liability for the month of April? All right. Now, when I'm talking about tax liability, this is under composition scheme. So as soon as you see 2 lakh was supply of services, your mind will go to 10, section 10, subsection 2A. But look at this. Turnover of the concern for the previous financial year was 100 lakh. Will it be covered under 10 2A? No. Okay, 100 lakh will not be allowed because as per section 10 subsection 2A, the 6% rate, yes, aggregate turnover for the preceding financial year, it has to be only up to 50 lakhs. This is in case of marginal service. But in section 10 subsection 1, okay, in section 10 subsection 1, marginal service other than restaurant and catering service, marginal service is allowed up to a certain limit. What was the limit? Higher of two things. Either it will be 10% of the turnover in the preceding financial year or 5 lakh, whichever is higher. So 10% of preceding year's turnover will be 10 lakh. This is 5 lakh. Which is higher? 10 lakh is higher. So if the service is up to 10 lakh, then yes, 10 subsection 1 composition scheme is allowed. Okay. So now here the supply of service was only 2 lakh. So yes, obviously allowed, right? So this, they were paying composition scheme under section 10 subsection 1. So what is the tax liability? For 10 subsection 1, your tax liability, tax rate is 1%, 0.5 CGST, 0.5 SGST. Alright. So 1% is the rate. So tax liability of Sharika and Co. for the month of April 2025 will be 10 lakh into 0.5%. Sorry, 0.5%. Okay, 0.5%, which is 5,000. Next, the firm imported the following. The firm imported the following services during May 2025. They did ask what was the value of supply in case of import of service. Architect services from Mr. Mudit, a partner of the firm who resides in France, for 1 lakh. The said service was paid but not used for furtherance of business. Management consultancy service from Mr. Mehta, a renowned lawyer in Sweden who was an ex-employee of the firm. The value of the said service was 3 lakh. Even though it was used in the furtherance of business, no consideration was paid. As per para 4 of schedule 1, there are two cases. Okay, either consideration, you have consideration, or you do not have consideration. If you have paid the consideration, then it is a supply. Always. Okay, if you have paid consideration, always it will be supply. But if you have not paid the consideration, two conditions should be satisfied. One, it should be between a related person. Okay, the transaction should have occurred between related parties. Second one, it should be the cause of furtherance of business. If both these conditions are satisfied, okay, if both these conditions are satisfied, then yes, it will be treated as supply. Now, look, you need to correlate this particular information with these two cases, okay. Here, consideration was paid, yes, so you don't have to think about anything else. It is a supply. So 1 lakh is included in the value of supply. Second one, no consideration was paid. So what are the two conditions that needs to be satisfied? Related party? Yes. Is it a related person? Ex-employee of the firm? It's not a related person. Okay. Forget about it. Doesn't matter if it was used in the course of furtherance of business. Both the things should be satisfied. Both conditions should be satisfied. Only then it will be considered as supply. Here, though it is in the course of furtherance of business, it is not between a related person. So, no. Okay, it will not be included. So, only 1 lakh will be the treated as supply. Then, third part, aggregate turnover of the firm crossed the limit of 150 lakh on 25/6/2025, from which date firm was liable to pay tax under regular scheme. So they have crossed the threshold limit. Now they're switching from composition scheme to regular scheme. Now you need to consider the ITC. Alright, they are eligible to claim ITC held on stock and capital goods. What did we study? Whatever was available on the date preceding the day from which they are becoming liable, from which they are switching, correct? So the day preceding such date is, when is the day that they cross the threshold limit? It was on 25/6/2025. So on 24/6/2025, whatever ITC was there, I can take it. Alright, moving on to case scenario 2. Let's read through the questions first. Effective date of registration, date by which invoice must be issued, the amount of interest payable for delay in payment of GST. So 3 things they have asked: effective date, invoice issue date, interest payable. Now let's move through the case scenario. 7 Star Private Limited, it's a body corporate, a regular GST registered supplier of both taxable and exempted goods, is located in Shimla, Himachal Pradesh. Himachal Pradesh, is it covered under any of the limits for registration, special limits? No. It will come under the general threshold limits only. The company provides the following details. The aggregate turnover, all intrastate, exceeded 20 lakh on 29 July and 40 lakh on 16th August. For Himachal Pradesh, as soon as you see Himachal Pradesh, you shouldn't think that it is a special case. No, it's a general threshold limit. So 40 lakh is the eligible limit. Alright, so 16th August is the date on which you became liable for registration. Now, how will you decide the effective date of registration? Have I applied for the registration within 30 days from which I became liable? I became liable on 16th August. When did I apply it for? Submitted the application on 30th August. Is it within 30 days? Obviously, 16th August, this is on 30th August. Within 30 days, I have applied. So, what will be the effective date of registration? Whenever I became liable. So, 16th August will be your effective date of registration. 16th August will be your correct answer. Next. It also entered into a contract with Alice Limited of Manali, Himachal Pradesh on 10th September for the supply of taxable goods worth 15 lakh. The payment for the same was received on 12th September. The goods were scheduled for delivery on 25th September but were removed from the factory on 24th September. For this particular thing, they asked what was the date by which the invoice has to be issued. For invoice, due date of invoice under section 31 is what we will consider here. Now this is goods, correct? Goods, does it involve movement of goods? Yes. Goods were scheduled for delivery. So what will be the due date of invoice under section 31? Whenever it is removed from the factory. The date of removal of goods will be the due date of invoice. Answer is 24th September. That is exactly when they have removed. It has opted monthly filing of GSTR 3B and filed GSTR 3B for the month of September on 19th December. September 3B, when should you file? You should file it on October 20. Yeah, that's the due date. Yes, they've given the due date also. The prescribed due date to file the GSTR 3B was 20th October. The amount of net GST payable in cash works out to be 56,000, which was paid on 19th December. Okay. Now we need to calculate the interest payable. That's what they had asked. How will you calculate the interest payable? It's 18%. Interest under section 50 is 18%. Now you need to calculate the number of days. So 20th October is the date by which you should have filed, but you did not file it. So when will you calculate? Starting from 21st October to when did you actually pay it? 19th December. So October 21 to 19 December. October 21 to 31 is 11 days. Okay, 21 to 31, 11 days. November, 30 days. December, 19 days. Total of 60 days. So what was the tax liability here? 56,000 is what should have been paid in cash. So 56,000 into 18% into 60 divided by 365. 1657 is your answer. Moving on to the next one. Kedar and Associates made an application for cancellation of GST in the month of March due to its closure of business. Okay, so they're cancelling their GST. Its application for cancellation was approved with effect from 4th September. Passed an order on 14th September. In the given case, Kedar and Associates is required to file final return, not required to file final return. 3 required to file final return is given. Okay, we need to figure out the date. Obviously, they need to file final return, correct? That is mandatory, yes. Because it is closing of business, you're applied for cancellation, definitely file the final return. Now we need to figure out what is the date. So option B is out of our scope only. Now between A, C and D, we need to decide. GSTR 10 is your final return. Yes. What is the due date? 3 months from the later of two things. Okay. This is a very important part of this particular question. Okay. 3 months from date of cancellation or date of order of cancellation, whichever is later, not earlier, whichever is later. Okay. So date of cancellation is 4th September. Date of order of cancellation is 14th September. Which is later? 14th September. So from 14th September, you need to calculate 3 months, which is 14th December. So you need to file the final return on or before 14th December. Moving on, Mr. Suresh, a supplier of ready-made garments, issued an invoice to a customer and erroneously charged a higher value by 54,000. Such an invoice was issued on 15th October. Which document is required to be issued in respect of invoice? So what happened? The sales value has been overstated, correct? They charged a higher value by 54,000. Now they need to reduce the value of sales. What will you issue? Credit note. Simple. That's a very simple question. Okay, you just need to issue a credit note. Now we are moving on to the descriptive questions. Okay, first question, which is your find the total GST payable in cash. Compute the net GST payable in cash. So compute the net GST payable in cash by Bright Consultancy Service for November. Okay, your 10-mark question is here. So let's go through the question first. Bright Consultancy Services, a GST registered firm in Lucknow, UP, provides taxable consultancy services and also trades in office equipment. It furnishes the following details for the month of November. Alright. Provided consultancy service to Alpha Limited in Lucknow. This is in within the state, yes. Intra-state. This is outward supply because you provided consultancy service. It is covered under FCM only. Outward supply. Provided consultancy service to Beta Limited registered in Delhi for 3 lakh. Outward supply. FCM. But this is IGST. Why? Because it is in Delhi. Sold office equipment worth Rs 7,50,000 to a registered dealer in Kanpur, UP. Intrastate, outward supply, FCM. Advance of 50,000 received from a client in UP for IT support services to be rendered in December. We saw that advance, if it was for goods, then you need not consider. But advance for services, it will be taxable. The time of supply is whenever you're receiving the advance only. Okay, you need not wait for services. This is for services, not for goods. Okay, since it is for service, this 50,000 is taxable whenever it is received. In the month of November, it is received. So yes, it is taxable in the month of November. Again, it's an outward supply. It's FCM. Purchased computers worth Rs 2 lakh from a registered supplier in Delhi. Delhi, IGST, because we are in UP. Purchased, inward supply. Paid annual membership fee of 60,000 to a recreation club for directors. Blocked ITC. Correct? This is inward supply, but it is blocked ITC. Why? Because it is not a part of statutory obligation or it is not for further outward supply. So, no. It's blocked ITC, 17 subsection 5. So, you cannot take the credit. Paid office rent of 1 lakh to a registered landlord in UP, invoice reflected in 2B. When can you take the credit? Only when it is reflected in GSTR 2B. Here office rent of 1 lakh you have paid to landlord in UP. Intrastate. So 1 lakh you can take the ITC. Purchased a car with seating capacity of 5 persons for director's use. Up to 13 persons including the driver, it is not allowed. Correct? It is blocked ITC. So here this is 5 person. For directors' use, it is blocked. You cannot take the credit. Purchased a delivery van, which means it is for movement of goods, for 12 lakh for transportation of office equipment. No depreciation is claimed on GST component, exclusive of GST at 28%. Okay. One important thing here, rate of GST for everything else they have given as 18%. For delivery van alone, they have given 28%. So when you're computing the answer, be very careful on applying the rate. Okay. Now, why did they give this particular information? No depreciation claimed on GST component. Because if depreciation was claimed, then you cannot take the ITC. Correct? Since depreciation was not claimed, you can very well take the ITC. Okay, why? Because this is for movement of goods. Delivery van, it is not blocked ITC. You can take the ITC. Now, availed legal consultancy services from Mr. Pranay, an individual advocate based in Lucknow, for a client recovery case of 50,000. Immediately when you see individual advocate, you will remember charge chapter, RCM case. Yes. But when is it an RCM case? When the supplier is an individual advocate and recipient is a business entity whose aggregate turnover has exceeded the threshold limit in the preceding financial year. Yes. Now we need to check if they have exceeded the threshold limit. No particular information regarding that has been given. So you can very well assume that yes, they had more than threshold limit. Yes, you're free to assume that. All amounts given are exclusive of GST. Okay. Rate is given. Conditions for availing ITC are satisfied. Very good. Mr. Pranay's turnover in the preceding financial year. Who is Pranay here? Pranay is the individual advocate. Does his turnover matter to me? No, doesn't matter. Okay. Why did they give this? Turnover in the preceding financial year was 25 lakh because they're telling that this fellow is registered. Yes, 25 lakh because this is service. Correct? They're trying to say that this fellow is registered. So they're trying to confuse whether you will classify it under RCM or not. Yes, for us in RCM case, supplier is simply an individual advocate. Okay, and the recipient. We are satisfying both these conditions, so it is RCM. You don't have to think much. Okay, now moving, I'll show the solution for this. Yes, let's look at the solution. Total GST payable. First, you will compute whatever is the total GST payable. You will split it into two. One is GST payable under forward charge. Other one is GST payable under reverse charge. Payable under forward charge, you saw consultancy service to Alpha Limited, which was within UP only. Okay, so 45,000, 45,000. Beta Limited, it was in Delhi, so 3 lakh. 18% is 54,000. Then sale of office equipment. Please mention the note number and write the notes. It is very, very important. Do not skip the notes. Okay. Sale of office equipment 7,50,000. It was intrastate. So 9%, 9%. Advance for the support service 50,000. It was 9%, 9%. So this is your total payable under forward charge. Then we saw reverse charge, only one service was there, which was legal consultancy service. It was within the state only. So 4,500, 4,500. 50,000 was the value. Next. Second part, what is the second part? You need to compute the ITC. Computation of ITC, you purchased computer from Delhi. So it was interstate, so IGST. Annual membership fee for director, it is blocked, so nothing. Office rent, we saw it is allowed. Yes, 9%, 9%. Car 5 seats, blocked. Delivery van, it was 14% and 14%, 28%. Alright. So here it will be 1,68,000, 1,68,000 on this 12 lakh. 14% on 12 lakh, 14% on 12 lakh. Then you will also involve whatever you paid, whatever is liable under RCM, that also you will involve in ITC. Legal consultancy services, 50,000, 4,500, 4,500. What is the next step? What is the net GST payable in cash? For that, you will take GST paid under forward charge. What is paid under forward charge here? 1,17,000, 1,17,000, 54,000. Yes, 1,17,000, 1,17,000, 54,000. You will not take the reverse charge here. Okay, you will only add it at the end. You cannot include it here. Less ITC available. Okay, first we are going to sort it out step by step. IGST credit you need to first utilize it completely against IGST. Then you can utilize it for CGST and SGST in any order possible. But what is the IGST credit you have here? 36,000. What is the liability? 54,000. You still have a liability of 18,000. Correct? But look at CGST. We have 1,81,500 in CGST and an equal amount in SGST also. But the output tax liability is only 1,17,000. So you still have balance. Yes. Out of 1,81,500, only 1,17,000 is the tax liability. How will you utilize CGST credit? If CGST credit, first you will utilize it against CGST only. And if there is any balance, okay, if IGST credit was not sufficient to discharge your IGST liability, then you can use the CGST credit against IGST. Correct? I hope I have not confused anybody. Okay. Whatever is balance with CGST, where can you utilize it? You can utilize it against IGST. Similarly, for SGST also, first you will utilize it against SGST. If balance is there, you can utilize it against IGST. Okay, so here from CGST we are taking some balance. 18,000 you can pay off the IGST. So CGST, your output tax liability is nil. SGST is also nil. IGST is also nil. Can we close it there? No. We have reverse charge. Reverse charge should be always paid in cash. Yes, you will pay it in cash and you will take the ITC. That is why in ITC available RCM was included. But here you will not include it. Why? Because it has to be paid in cash. RCM has to be paid in cash. So RCM you will add at the end. 4,500, 4,500. So what is your net GST payable in cash? 4,500, 4,500. That is all with your 10 mark question. Examine whether the activity of import of service in the following independent cases would amount to supply under section 7. When I am talking about import of service, I have already said this in one of the case scenarios. Does it have consideration? If the answer is yes, it is always a supply. If it doesn't have consideration, okay, if it doesn't involve consideration, then two conditions must be satisfied. What are they? It should be between related persons, and second one, it should be in the course of furtherance of business. If both these conditions are satisfied, go ahead and classify it as supply. Otherwise, not a supply. Let's look at here. Interior decoration service for a residence. Okay. The amount paid for the said service. So consideration is involved. Don't think about anything else. It is definitely a supply. Second, did not pay any consideration. Okay. Two conditions need to be satisfied. Course of furtherance of business. Received interior decoration service for her residence. It's not satisfied. Yes. But she received it from her brother only. Brother should they be wholly dependent? Yes. Only spouse and children are considered as related person, family members, related persons, irrespective of if they are dependent or not. But parents, grandparents, brother and sister definitely has to be wholly dependent in order to be classified as family. Okay, in order to be involved in the related person list. Okay, so here related person is satisfied, but since it is for residence, it is not a supply. Will your answer change if in the above case they have taken the interior decoration service with regard to her business premises? Then yes, related person, no consideration, but it is for course of furtherance of business, then yes, it will be considered as supply. We move to the next question. Srinivas and Sons, a partnership firm based in Nagpur, Maharashtra. Maharashtra, okay, is a wholesaler of taxable product X and product Y exempt by way of notification. So one product is taxable, the other one is exempted by way of notification. Only within the state of Maharashtra. So completely involved in intrastate supply. Its aggregate turnover in the preceding financial year is 130 lakhs. The firm wishes to opt for composition scheme. For composition scheme, in case of Maharashtra, what is the limit? 150 lakhs. Yes. Is he within the 150 lakh limit? Yes. He is involved only with intrastate? Yes. Is he involving himself with any services that are not leviable to tax under this act? Not leviable is different, exempt is different. Okay, this is exempted by way of notification. Not leviable means they are not even coming under the scope of GST. Correct? This is under the scope of GST, but it is exempted by way of notification. So can he opt for composition scheme? Yes. What was the question? Its accountant is of the view that a person engaged in making supply of exempt goods is not liable for the said scheme. Did we study anywhere that a person who is engaged in making supply of exempt goods is not eligible for the said scheme? No. Exempt goods, no problem. It should not be a service that is not leviable under GST. If you are involved with any service that is not leviable under GST, then yes, you cannot be eligible for composition scheme. Here is very well eligible for composition scheme. Okay, it is exempted only. Taxable and exempted is fine. He is also giving only intrastate and his limit is also within the threshold limit. So very well he can go ahead with the composition scheme. Next part, determine the place of supply. Okay, has a postpaid mobile connection. In case of postpaid mobile connection, we learned it under section 11 section 12 subsection 11. Okay, if the records, if we have the address of the recipient in the records, then it will be that will be the place of supply. That particular address will be the place of supply. So here the recipient is Mr. Ramesh. We have his address on the records. It is Kolkata, West Bengal. That is the address. That will be your place of supply. Mr. Premanand subscribed a prepaid internet connection from PQR Distributors, a registered distributor of recharge vouchers located in Bengaluru, Karnataka. It sells prepaid recharge vouchers to final subscribers in Chennai, Tamil Nadu. So whenever there is a prepaid connection involved, and if it is through a distributor or a regulator, okay, if it is through a distributor, then whatever is the address of that distributor, if it is available on the records, then that will be the place of supply. This is also covered under the same section, section 12 subsection 11. Okay, so this will be Karnataka. Even though they are giving it to the final subscribers in Chennai, Tamil Nadu, still the distributor's location is Karnataka. So the place of supply is also Karnataka. Buland Machine Limited, registered in the state of Andhra Pradesh, supplied a machinery to Rayan Wind Farms Limited in the state of Karnataka. This machinery was assembled and installed. Then whichever is a site of assembly and installation is a place of supply. Where was it installed? Installed at the windmill, which was located in the state of Tamil Nadu. Tamil Nadu is a place of supply. Section 10, subsection 1, clause D. Next. Sher Singh, a registered supplier, has received advance payment with respect to services. Okay. His accountant asked him to issue the receipt voucher with respect to such services to be supplied. Yes, when you are receiving the advance payment, obviously you need to issue the receipt voucher. However, he is apprehensive as to what would happen in case a receipt voucher is issued, but subsequently no services are supplied. Okay, you have issued a receipt voucher, but no further supply has taken place. Okay, you are required to advise Sher Singh regarding the same. Very simple. You definitely have to issue the receipt voucher when you receive the advance. There is no compromise there. What happens if the service was not done subsequently? Okay, there was no supply of service that took place after that. No supply took place. What will you do? Refund voucher. You issue a receipt voucher, then you issue a refund voucher. That's all. That is all. Okay, you just need to elaborate on this. Does cancellation of registration impose any tax obligation on the person whose registration is so cancelled? The thing is, whatever tax liability that they had will not be absolved just because registration is cancelled. They are still liable for whatever is pending. They need to file the pending returns. Okay. After cancellation of registration, no more returns can be filed. I mean, if October cancellation took place, November, December, Jan, they cannot file the returns. But whatever was pending up until October, they definitely have to file the returns and pay the taxes, pay the obligations. Okay. Whose registration? Okay. Does cancellation impose any tax obligation? There is also another one more thing. Whatever is the ITC on their stock and capital goods has to be paid. Yes. There was a particular figure that we studied for being paid. What is it? For inputs, whatever is the ITC or the output tax, whichever is higher, that has to be paid either through your electronic cash ledger or by way of electronic credit ledger. In case of capital goods, whatever is the ITC, you reduced ITC for the remaining life. Yes, we have learnt that also. There is a reduced ITC for the remaining life or the output tax on the transaction value, okay, whichever is higher. This you will have to make the payment. So impose any tax obligations, yes, whatever was left is still there, okay, whatever is still due, you have to pay it. Just because your registration is cancelled doesn't mean you're free from those obligations. Services provided by an entity registered under Section 12AB of the Income Tax Act are exempt from GST if such services are provided by way of charitable activities. Elaborate the term charitable activities. What did we study in charitable activities? We studied by way of spirituality, by way of yoga, yes, advancement of religion, yes, then advancement of educational programs, skill development relating to abandoned, orphaned, homeless children, prisoners, persons over the age of 65 years in rural area, physically or mentally abused, preservation of environment, okay. You need to mention all of this. This is quite an unexpected question because it's more like a theory based question. Yes, but ICAI works in very unpredictable ways. So you need to be ready. So please make sure that you know you can list it off the top of your head. Okay, so public health. You already this might be already in your head. Okay, this comes off easily. Religion, spirituality, yoga, educational programs, preservation of environment. But if you mention this, it's bonus points, right? Public health, care and counseling of terminally ill persons afflicted with HIV/AIDS, public awareness of preventive health, family planning, prevention of HIV infection. You need to mention all of this, okay? The question was elaborate the term charitable activities. So you need to list them down. So when you are revising, please make sure that you look at these activities, okay. Don't just study that, okay, if they mention public charitable activities or care or counseling of HIV patients, then we can say it is exempt. Don't rely on just that, okay. You need to be able to remember these things so that you can produce it on the paper, okay. Don't just depend on visual memory there, okay. Enumerate the legal provisions to determine the time of supply of service which are taxable under reverse charge. Reverse charge service. It will be the earlier of three things. Date of payment, date of invoice in case the invoice is supposed to be issued by the recipient, or 61st day from the due date of invoice in case the invoice is issued by the supplier. Okay, very important. 61st day in case of the date of invoice is issued by the supplier, date of invoice in case it has to be issued by the recipient, and date of payment. What will be date of payment? Either whenever it is recorded in the books of accounts or whenever the bank account is debited, whichever is earlier. Okay, so earlier of three things. Date of payment, 61st day from the date of invoice in case supplier is issuing the invoice, or the date of invoice in case it is to be issued by the recipient. There is no onus of filing any monthly and annual statements by electronic commerce operator. Onus means liability. Okay, they are telling there is no liability for the the electronic commerce operator, to file any monthly or annual returns. Is that true? No. This fellow has to pay, they have to report monthly also, annually also. Okay, they are collecting TCS under section 52. Yes, they have to file a return called GSTR 8, monthly return. 10th of subsequent month, they need to file it. Okay, so this is wrong. This statement is wrong. Monthly return is to be filed. Annual return, yes, 31st December of next financial year. They have to file the annual return also. So with this, we conclude MTP 1.